We all work so hard for our money. We're saving for a home, for retirement, for the future. But what if one unexpected bill could just wipe out a huge chunk of those savings? It's a scary thought, right? Well, that's why today we're going to talk about how to build your financial shield and make sure that never happens to you. So let me ask you this right off the bat, right off the get. Could one unexpected health issue drain your savings? It's a question that probably keeps a lot of us up at night. I mean, you can do everything right, build an emergency fund, invest for the long haul, but are you really, truly protected against the one thing that can derail it all in a heartbeat? Because here's the reality for most of us here in Canada. Our provincial health plans, they're fantastic for the big stuff. Doctor visits, hospital stays, but it's all the other things that can really bleed you dry. We're talking prescriptions, a cracked tooth that needs a crown, physiotherapy. Those costs can add up, and they add up fast, forcing you to pull money from your long-term goals. But there is a super powerful tool to protect yourself, and that is extended health insurance. Think of it as that financial shield standing between your hard-earned savings and all those unpredictable costs. Now, there are basically two main ways to get this protection, so let's break them down. Okay, so you have two main flavors here. On one side, you've got group plans. This is what most people have. You get it through your job, it's simple, it's convenient, it's kind of a one-size-fits-most deal. But then you have individual plans. This is where you get to be in the driver's seat. You buy it yourself, you own it, you control it, and you can customize it to fit your life perfectly. And the best part, if you change jobs, it comes right along with you. You can even use one to top up or fill in the gaps that your work plan doesn't cover. All right, so let's say you've got a plan. Awesome. But do you actually know what it covers? Because the devil is always in the details, isn't it? To really understand how strong your financial shield is, you've got to learn to speak the language. So let's decode some of that fine print. First up, the deductible. The easiest way to think about this is it's the amount of money you have to pay out of your own pocket first each year. Once you've hit that magic number, then your insurance company starts to chip in. And remember, that counter resets every single year. Let's make this super simple. Meet Jose. His dental plan has a $100 deductible. So he goes for a cleaning that costs $150. Jose pays the first $100 himself. Boom, deductible met. The remaining $50 is now eligible for his insurance to help cover. Okay, next up is co-insurance. So once you've paid your deductible, this is where you and your insurance company start sharing the cost of the bill. Your plan covers a certain percentage, and you're on the hook for the rest. It's like a partnership. Let's look at Consuela's plan. It has 80% co-insurance. Let's say she has a $200 dental bill, and her deductible is already paid. Her insurance pays 80% of that, which is $160. Consuela just pays the other 20%, or $40. The takeaway here is really simple. The higher that first number, that co-insurance percentage, the less you end up paying out of pocket. Now that we've got the basics down, let's put it all to the ultimate test, travel insurance. This is without a doubt one of the most critical and honestly most misunderstood parts of any health plan. Because when something goes wrong when you're far from home, the financial stakes get a whole lot higher. Okay, lean in for this one. This is probably the single most important thing to understand about travel insurance. Unlike other policies where they check you out beforehand, a lot of travel insurers do their real investigation after you file a claim. Think about that. It means while you're in a hospital bed in a foreign country, they're digging through your medical history to decide if they're going to pay the bill. It is a huge risk that can lead to some absolutely devastating financial surprises. So how do they do this? They use something called a look-back period, usually about 90 to 180 days before your trip, and they're looking for any signs of instability in your health. Have you seen a doctor about new symptoms? Have you changed medications? Had any new tests done? If you answer yes to any of these, that issue is probably going to be considered a pre-existing condition, and guess what? Any emergency related to it on your trip likely won't be covered. And this is where it gets really real. Take Antonio. He's had a managed chronic condition for years, but if the insurer doesn't see it as perfectly stable, a related emergency, like a seizure during his trip to Italy, is not going to be covered. He'd be on the hook for that entire massive bill. Now, if he got into a totally random car accident, that is covered. Understanding that difference can literally be the difference between a small problem and a complete financial disaster. So, what actually goes into the price tag for this kind of protection? Well, it really just boils down to 4 key things. How much coverage you want, how long your trip is, where you're going. Yep, a trip to the US will cost more than one to Mexico. And of course, the biggest factor of all, your age and your overall health. And believe me, age has a huge impact. Just look at this example. For the exact same trip, same coverage,
60-year-old Trent pays 26% more than 40-year-old Quinn's. And why is that? Well, it's pretty simple. From an insurer's point of view, the risk of a claim just goes up as we get older. And the price? Well, the price reflects that risk.
So as we start to wrap this up, if there's one thing you take away from all this, it's that knowledge is power. It really is. Whether it's for a simple dental checkup or a trip halfway around the world, your insurance policy is only as strong as your understanding of it. When you know the terms, the limits, and the exclusions, you turn that piece of paper into a real, solid financial shield.
So I'm going to leave you with this one question to think about. What's the biggest gap in your financial shield? Take a minute. Think about your own situation. Do you know what your deductible is? Are you really covered when you travel? Finding those gaps, that's the very first step to making sure you're truly protected. Thanks for tuning in.